Europe has dramatically impaired its own economy and opportunities for economic growth by having such a opposition to securitization. The United States has uh, created really big competitive advantages by embracing securitization. Lower cost of lending, greater liquidity, greater opportunities to create liquidity and monetization for investors, and allow the flight and movement and mobility and growth of capital around being able to securitize various things. So essentially, you basically risk mitigate by pooling assets into a single vehicle. You create liquidity; it becomes an investable asset. You've quite literally securitized it, and there's any number of various financial advantages that come from it. But really, it creates great opportunities to the producers and consumers that are involved, not merely to the investors. If the only opportunity were to the investors, then the opportunity for the investors would go away. Because if there isn't an opportunity to the consumers and producers, then the opportunity set goes away. So this notion that there are these things out there where investors benefit and producers, consumers don't in some sort of sustainable way is preposterous. And securitization is certainly an example where you can securitize something that performs badly. You can securitize something and have the operators or managers behind it be bad actors. But the notion of saying securitization is a bad idea is not only illogical in moving from that particular to universal, and the hasty generalization behind it, but it is very counterproductive to what is necessary in terms of economic growth. So I can use my private equity example, securitization, we can go on and on. But this throwing the baby out with the bathwater is easily avoidable with rudimentary logic. We do not take one single bad example and say, therefore, the whole thing needs to go. So now the question becomes, is there generally a bad incentive in some of these various actions that exist in our capital markets? Is investment banking generally filled with bad ideas, those that are trying to provide advice, counsel, and capital in debt and equity securities to companies? Well, it would be a real stretch to say that it is a bad idea to provide advice or capital to companies. It would be a very, very counterproductive idea, as we see in the US Europe disparity, to say securitization is net doing more harm than good.